Everyone, welcome to Credexa. Today we are going to learn about something that affects every economy, every business and even you, the financial market. In this video, we'll be understanding what is financial market, what are its types, its key function, the main participants and finally why it matters. So let's directly dive into the definition of financial market. A financial market is a place where people buy and sell financial products like shares, bonds, currencies, or more. Think of financial market like Amazon, but instead of buying clothes or gadgets, people buy things like stocks or government bonds. Let's say you have extra money and want to invest, and on the other side, a company wants to raise money to build new factory. The financial market helps connect you with the company. It's like a bridge that connects people with money and people who need money. Now, let's break down the five main types of financial market with examples. Capital market. This is where long-term investments happen. When a company launches its IPO, that is initial public offering, it is using the primary market. Later, when you buy or sell the company's shares on stock exchange, that is the secondary market. Think of it like primary market is equal to buying a brand new phone from an official store, and secondary market is equal to buying a used phone from someone on OLX. Money market. This is for short-term borrowing and lending, usually less than a year. When banks lend money to each other overnight or when the government issues treasury bills for 91 days. That's the money market. You can't really see this market, but it helps keep the system running smoothly. It's like borrowing money from a friend just for a week until your salary comes in. Derivatives market. This is where people trade contracts whose value comes from other things like stocks, golds, or oils. You think the price of gold will rise in the next 3 months, so you sign a futures contract to buy gold at today's price. That's a derivative. It's like booking a hotel in Goa 2 months in advance at a fixed price. Even if the prices rise later, you pay the price you booked in. Foreign exchange market or Forex market. This is where currencies are traded. You travel to US or convert Indian rupees to US dollar. Thus Forex. Or a company in India importing from Germany must pay in euros, so it buys euros in the forex market. It's like a giant global currency swap platform. Commodities market. Here raw materials like gold, oil and wheat are traded. Example, a jewelry business might buy gold features to lock in the price today for delivery next month. Think of it like wholesale market but online and global. Now let us understand what financial markets actually do. They perform six main functions. Capital allocation. It helps move money from saver to businesses that needs it. For example, your SIP investments go to mutual funds. Mutual funds invests it in companies and companies use it for growth. The second main function is price discovery. Market decides the fair price of assets based on demand and supply. For example, if everybody wants to buy shares of Reliance, price goes up. If nobody wants to buy, price goes down. Liquidity. It allows you to quickly buy or sell your investment. For example, if you suddenly need cash, you can sell your shares on stock exchange within seconds. The fourth major function is risk management. Market allows hedging using tools like derivatives. For example, a farmer uses a futures contract to lock in the price of the wheat, so he doesn't lose the money if prices fall later. Information aggregation. Market prices reflect collective knowledge and expectation of millions of people. For example, if there is a news that a tech company made a breakthrough, the stock prices rises instantly, reflecting investors' confidence. Trade facilitation. Market makes sure that transaction happen securely, transparently, and efficiently. We all take part in this market. Let's look at the key participants. individual investors, example you, me, and anyone buying shares from a mobile app. Institutional investors like mutual funds, pension funds, insurance companies, they manage large sum of money. Corporation like Infosys raising money by issuing bonds or shares. Governments, Indian government issuing bonds to build highways or airports. Market intermediaries like brokers like Zerodha, Angel One, they help you trade. Regulators, for example, SEBI in India ensures that everyone follows the rule. Why are the financial markets important? They grow the economy. For example, startups like Zomato or Paytm were funded through capital markets, encouraging saving and investment. For example, people now invest in SIPs instead of just saving in banks. Efficient use of resources. Money flow to companies with better ideas and performance. Support government policies. RBI controls liquidity and inflation using bonds in money market. Link India to the global market. Foreign investors invest in Indian market and vice versa. Now you understand financial markets are not just for big banks or stock traders. They affect everyone from the price of your phone to the interest on your loan and even job creation.